strokes, you can't see anything, can you? Your moment of polarity here, let's go to a higher time frame. Your moment of polarity here is defined by the larger time frame, right? Daily to daily accumulation. Distribution candle, very simple. This isn't going to decide polarity of this range. This is going to decide polarity of this move. And then you would have this level here. And this isn't really going to be polarity of the move either, unless, for example, you come down, you hit trend, you break trend, you hit this and crawl back over. Then you have the polarity was actually this, because it controlled all pieces of the move. So it's just very important as a first definition to understand that the polarity is what kind of controls these ranges. So, you lose that move and you're down in here, right? Like whatever daily, we've done this a million times, so we don't need to do it, but oops. The origin point, right? The point that broke out the move is the point that holds it up. So new people won't be able to follow that, but that's okay. It'll be in the replays sometime along. I'll give a quick TLDR. Whatever breaks out the move is also what can hold it up. It's kind of like one of the final polarized moments on a chart. So like in here, you had an origin level, for example. This was the origin on the 4. This is what broke the move out. It's also what can hold it up. So just a quick TLDR without getting into a huge lesson, because we've talked for many hours this month about it. So it wouldn't be appropriate to go and do it again. But what breaks a move can also hold it up. It can be the final point of polarity, just like a trend. What breaks a trend can actually be the, and that's something we've never talked about, backside trends. So that's something we can add to this mix here. What breaks the move can also hold it up. So that's where a lot of times people see like a backside trend get hit and then it goes down after, because what broke the move down can also hold it down, right? Like imagine this is an origin level as well. Imagine your trend is an origin level. Your trend, the backside can act as what broke the move down can also be the thing that holds it down, just like an origin level. What breaks it up can also be what holds it up. So it can be a point of polarity in the charts. So sometimes you see a backside trend, and once it's regained, it's actually lost that trend break. So it was more butterfly effect 2 stuff, but anyways, it's okay to do some little kind of spoilers and hint drops here and there. So, but really the most important thing about this today is that polarity isn't defined by like one moment. You have like a trail of hold levels. Oh my God, hold level. And yeah, okay, here it worked great, but that's not always what polarity is going to be. Like, fine, you have the hold level here, it works great. You lost trend, the hold is already tested. So polarity is your trend in this case. If this hold wasn't tested, there may have been a moment that you could have found where you can break trend, lose it, go back up. And that's actually the polarity point. This was already tested. And it laddered down off that test. It's not like it developed a little micro range up and laddered up. It's not like it developed this. This is kind of pointless, right? It also acts as its own like little micro polarity inside the interior range, but at the same time, like it had already laddered down the move here. So it already laddered down. It's not like it's laddering up and it's holding a range after laddering up. So, very, very easy. The polarity becomes, a moment higher in the range. So, polarity, just to understand it, it's not going to always be one thing. It's theory. It's dictated based on the theory that's in play in the moment. So just important to talk about before we get into the lesson.
Agreeing, so this is what you're doing. You are saying, and this is what you guys know because I've told you this before. So exterior moments create the polarity. Exterior events, they create polarity, right? Exterior creates polarity. Interior decides polarity. So that what's happening here is you guys are saying, okay, we're on the 1 minute chart and we are agreeing that this will decide polarity. So the 1 minute is going like this. And we're saying, okay, we agree that the interior decides polarity. And you guys, the first thing you do is you move to the 3 minute time frame, which is you were agreeing that you are saying exterior on the 3 minute is creating polarity. So you have basically said, oh, a 5 minute can't exist, a 15 can't exist, a 1 hour, a 4 hour, a 12 hour, a daily, a weekly, a monthly. You're saying by doing this 1 to 3, you are saying that none of these can exist because what you're agreeing with is that the 3 minute is creating polarity. Well, what happened to the 5 minute? Why can't the 5 minute create the polarity for the 3 minute, right? Well, why can't the, erase this way, do that, do this, do that, scrub all that out and scrub that out. So what happened to the higher time frames where you're saying, oh, if the 3 minute is creating polarity, we must be saying that the 5 minute doesn't exist, and 15 an hourly, 4 and 12 and a daily. So you're just creating an issue right there off the start. You can use the 1 minute to say, okay, this interior decides what's happening with polarity, but what is creating that polarity becomes a real question, right? Like daily could create polarity. If there's no polarity there, then we can move down to the 12 hour and say the 12 hour can create polarity. If the 12 hour is what creates polarity, everything below that can decide it, right? So then you can say, okay, everything in the red can decide polarity if the 12 hour was creating polarity. Well, maybe there is no 12 hour moment there. So let's just delete that, right? Let's just say There is no daily or anything like that. We just don't have enough time frames here. So what we're saying is, okay, there's no hold levels on the daily. Okay, there's no hold levels on the 12-hour. Okay, there's nothing on the 4-hour. Oh, wait a second, we have something on the hourly. Okay, we're already on the 15 minutes, so we'll go with that. And we'll say, okay, there is nothing on the hourly. There's only the 15-minute, which we see right here. Okay, the 15-minute is deciding polarity. So that can be decided on any one of these timeframes. So that's the difference between interior and exterior, right? Your interior here is in, actually, let's do it properly here. Let's go like this. Your exterior moment now is existing here, right? Which is saying we are creating polarity. That means anything below it is deciding polarity. So that means anything in these timeframes can decide polarity. If you are doing it the other way, which is the way you guys are doing it, so again, that's the common theme that I see between everybody in this, is that they do this, okay? They go like this and they say, okay, I'm on the 1 minute chart. Let me move up in time frames like this to find these moments of polarity. You guys are doing it wrong. You guys are basically trying to justify the next time frame up and ignore everything. So if you're jumping from the 1 minute to the 3 minute to find polarity, again, you're basically saying that polarity doesn't exist here.
So this is interesting to talk about because we saw this on Bitcoin just when we had this little move here. One form of polarity that we can see on the chart. So we can just redraw this trend here. And, it's very straightforward. You've got your range trend here, which is daily to daily, highest time frame, and we work it down, right? So you have this moment here. And if you're working up in time frames, you're basically breaking your polarity, because we never work up in time frames on these things. We always work down on time frames. This is everything in day trading is about a decycling theory. Like, I realized that very early on in my journeys. It's all about having one piece that fizzles down. It's a decycling theory where the information collapses on top of itself. So when you're looking at these charts and you're saying, okay, well, what can actually be this polarity in this movie? And so you work from your highest time frame down, right? You look for polarity. And at first you would say, okay, well, you have a backside daily, and inside of a backside daily, you'd have the front side right here, which is already marked, and then you'd have the actual test of the level. So that's tested. So this one you can automatically take out. This may be a 4-hour level. I'm not sure if I have this marked as a 4. Nope, it was just the greediest body candle on the daily, which is perfectly fine. So then you have your daily test. Inside of there, do you have something like a 4-hour? You work time frame down, right? So if this was the backside 4-hour, you'd have the front side here, right? So you have the front side here, which gets tested. You have the front side here, which gets tested perfectly twice, and it's as simple as that. You move down in time frame, so you can mark this as red. You wouldn't even actually need this because this is already back tested, and it breaks through it once, and then it tries to go after it as a reverse level. Doesn't happen. So you can actually just get rid of this. It's not even a candidate for a reverse level at this moment. Beyond that, your backside is already tested here. It's what bounced the move. Come on. Your front side is not tested. So you could have something between this range here, right here. It's possible that you have something here, and more likely it would be right here. What breaks this move out can hold it up. So you can mark everything from this being kind of the best moment as it tests the backside, the front side, and kind of the moment that would have broke it out. And this could even be probably reduced back to a moment like this. If you were to work down in time frames, I'm sure if we can just go here real quick. Oops, no, we don't want to get out of that. I'm sure we can go back here and find what looks like to be that looks like it's the 5 minute. Looks like it's a 5 minute origin right here. 5 minute origin. I'm wondering if this is a 15 actually. No, it's a 5. I was right. First value that gets tested, it's not here. So this is how you can decide if it's a 3 minute or a 5 minute here. The first test happens before the 3 minute. So the 5 minutes established right here. That's the first test. That's how you can see if it's an origin level, and that's how you see which time frame. So then you can just simply go back to your 4-hour here, and which one was it? No. Okay, so we can delete this. So then that's the moment right there, right? So like very easily you can define that that's the 5 minute. And for anybody who wants to know, how did you know it was a 5 minute? It's just an experience thing. I've done this so many times now that I can just, I know how many candles equal and make up, and the way they look, it's pretty easy to pinpoint after, a lifetime. So you're looking at this move and you're deciding, okay, where can polarity be? And let's get a little further in the move here. Okay, right there. You have the test of the move. So this is gone. You're cycling down to find that moment of polarity. This is gone. Next, you'd be here. That's already tested. Whatever this was tested. I don't even know what this was. This is a level we had talked about in mentorship somewhere. The hourly, okay, which is fine. This hourly is tested and it cycles to this one right here, which is perfectly fine. I think we diminished that down to a 15, and then you'd be something like this or this. Fine, we can just mark this for ease of example. And you're moving up in time frames right now. Like you have nothing left. So polarity in this moment is being created off of things that have already been tested. Like if you need to break this trend in order to go back attack a larger range, which includes everything from ladder points off of this to move this thing up to the base of the range to even lower is what we're seeing right now. This trend has to hold. And the reason it has to hold is because it's a daily, and that's kind of common sense. A daily trend is breaking, and it's such an important critical piece. You're going to have a big reaction, and then it's just ends up being okay. Well, like, is it laddering off of this range? Is it laddering off of that range? That next piece, that's the dictation of your trade. So you can go back to this, and polarity in this chart. You don't have much left after this. Everything is back tested. Maybe you have a level here that can hold the move, and that would be it. There's a problem that gets created here. There's a problem with polarity that gets created here is by going after this level, you're already asking a lot to start closing back above that trend, because that trend needs to hold. It needs to do something like this. Deep dive, goes over top, dives, goes over top, holds trend, goes, loses trend, but regains it over a large time frame. So you're on a time clock with this, and people are already know this. You're kind of on a very, very thin time clock, because this trend, the longer you hold it, the harder it's going to be to regain this level, because that time and space that's happening here is increasing every single minute of the day that goes by. That trend is getting another little tiny sliver of a percentage higher and higher and higher until the point becomes where it hits it. And even if it does have a crazy bounce, the larger time frames are still closing underneath that. And then you get a backside bounce. The backside holds it down. Even if the backside holds it down for 15 minutes, it's come to a point where 15 minutes is almost closing a 4-hour candle, which means it's lost the trend on a 4-hour, and it's hard closing a 4-hour candle on this trend. Like, has it ever done that before? So then you go and you look and say, okay, has it ever hard closed a 4-hour? No, it's never hard closed a 4 hours. So this would be the first 4-hour it hard closes. So then you're going to expect an even further down reaction, which is going to start going after, hey, it's hard closing a daily, which is just going to ensue to a big dump to the base of the range, right? Or at least to the next moment where it's going to be. So finding polarity is always understanding what's happening in the move, because polarity is always going to be different. In this scenario, go to the 4-hour. In this scenario, you have kind of like a 15-minute level that would have tried to hold this thing up, and it loses that 15-minute level. So like, what is it going to attack next if it loses that 15-minute level? Where could it possibly go next? So then you can start going back to the range, and you can start defining like, okay, where's this thing able to go? So immediately you can mark, okay, this was the test of the 4-hour. So is there anything holding this up, right? So you can mark this 15. That's already tested. It can't really hold it up. You can mark body of this. How far below trend is that? Okay, that could maybe work. If this holds, if this holds the move, it's going to continue to keep its trend and move up to attack something different. I wonder if there's anything on the hourly here. Well, my trading view is always so slow. Well, the hourly is already tested, so actually you can't use the hourly. So this is actually already tested. So now you're getting to kind of spooky territory. And this is why we never work up. Actually, what I'm doing right now is a cardinal sin. Never work up. Backside 4 that breaks it out. Polarity, no, it's already gone on attack lower time frames. Hourly is already tested right here. Can't be that, and it's tested again. We need to mark this hourly and see where the 15-minute exists in that. So the 15-minute backside is being tested inside that hourly. So both the 15 and the hourly is being tested. This is almost like, if it loses this level, the move is gone. If it loses this level, the trend is going to break. It's pretty close to that. So you have a moment of polarity here defined between, you're not even at this trend anymore, because yeah, you're not, there's nothing to deep dive, because okay, maybe this 15-minute wick on the 15-minute level, but there's nothing left to deep dive. Like, it's lost everything else. There could be a final hold level in here. Let's investigate. There's going to be something. There's going to be like a 5-minute, yeah. So the 5-minute backside right here. So this would be it. This would be the final part of the move. Well, this is actually like a 1 minute origin. What looks like a 1 minute origin, not a 5 minute backside. Yeah, the 1 minute origin right here. Broke the move out to hold it up. So maybe this, if you test this, you're not testing the 3. You're not failing this to go back and test the 3. Okay, replayer tool off, please. Well, my trading view is slow today. I don't know if you guys are seeing this, but it is slow as glasses. Jesus. My computer's dying. I've got a new one on the way, but it's we all know what happens to the move, so it's not like, oh no, spoilers. I have a new computer on the way, but Jesus. So you're in this move and you're trying to define polarity. This whole move is being held up and you're trying to define polarity of this move. Go to the 5 minute. Let's see this thing play out. That's it, right? Like it's gone. There's nothing left to hold and test here. There's absolutely nothing left to hold and test. You have trend. Polarity's happening much higher in this chart, right? Like that's the problem when you lose one of these trends, is that it's the time and space that you have levels underneath your trend. And the problem with any levels underneath your trend is that anything in this range, it can't really hold the move. And you're already losing. Like, imagine you have a daily trend here. It's never closed a 4-hour candle. In order for it to not hard close this, it would have to go down, bounce, and come up like a ridiculous amount, which would then just reset this range to here. And it's that time and space that exists from the level that can hold up the move to the actual trend loss, which, I mean, I think it's kind of common sense, right? Like if the bigger this space is here, right? The bigger your space is between trend and your level that's holding up the move, the harder it's going to be to not have those hard closes, because it's got to have like such a crazy reaction, such a crazy bounce. And it happens sometimes, and that's where you see trends deep divin, but yeah, not this time. That's all I'm going to say about that. Used 62.359 wick. I would have targeted the body and missed a move. 62.359. I used 63.259. So whenever we're deciding between the body and the wick, we've gone over this, but it's okay to do another catch up on it. Whenever we're deciding between the body and the wick of a move, it's kind of a combining factor of all things relevant. Any wick or body is a test of a move. So when you start going down lower time frames, if you want to, if you're sitting here in this moment saying, if you're here in the moment saying, oh, like I want to get along on this trade, and you're targeting 63.214. If 63.416 holds the move, it's the same as targeting this. This is one test. This is 2 levels that we mark, but it's one test of the same level. So you're going down in the move and you're like, okay, well, I want to rebuy. Both these levels are tested. The candle is tested. Whether it goes after the greediest part of the move, which can be diminished down to other things such as, oh, well, what about the 15-minute level? Can it test the body of the 15-minute level? Well, it could test either the body, you get into the same thing. You could test the body, you could test the wick. And then it doesn't matter which one you test. It's not going to test them to each independently. Or sometimes what you'll see happen is it'll go and it'll test the 1-hour wick, and then it goes and tests also the 15-minute, which can be the candle, or it can be the backside, which can coincide with the greediest hold level. Sometimes you see the greediest hold level in a move here also ends up being the backside on the 15, and then that's the level it goes after, because it's tested all things relevant. It's tested both the 15 and the hourly, right? And in this case, what you have is you have that same thing happening. So you go to the hourly, and you've tested the hourly, not only hourly, but you've also tested the 15. So you have a perfect spot for the move because you're testing both time frames. So whenever you're looking at these things, unless it's a candle that falls straight off the face of the earth like this, that has, not multiple tests, then you're going to see typically multiple time frames gone after. And this is why we work down in time frames, because you see more of the relevant scope of the picture by doing that. If we were to work from the 3-minute up, what we'd be doing? We'd be marking every single little level down here. You'd be marking everything in here. You'd be marking everything in this top here. And you'd be working time frame up just to remove your information, just to be like, oh, that's not right. Now I have to go back down and double check and verify. It's simply why you work time frame down, because you have a very easy capsulate of information. A 4-hour, nothing's there. 1 hour, great. You've got 2 levels here that you can base it off of. Now you know it's also testing the 1 hour and timeframes below it. So now you have the hourly, and you're like, oh, the 15-minute backside is also the 1 hour test. So now you're not only testing the 15, but you're testing the hourly. So you're not going to test the 15 in the future. Maybe you'll test a 5 if it's inside of this range here, but you're not going to go and back test that now. Instead, you've back tested this hourly right here, right? Like you've back tested whatever this is. And we can delete this stuff. Can't even see what's going on here. Tested that, go to the 15. We've also got a 15 backside here. So in this moment, you've tested the 15-minute backside, which is also testing that same hourly, because this can be a test on the hourly. This can be a test of the backside, or this can be the 15-minute test. This is the hourly test. So all things tested at once, you have to realize, because this is where people miss a lot of moves. They go and they mark an hourly and they're like, oh, the hourly got tested, the 15 didn't. No, actually, they both got tested in one hit. So now they're gone. They're done. So when you lose this hourly here, unless you have, like, basically, you have to stay above this, because then you're breaking the ladder, which is exactly what it does, because you've already tested the 15, you've already tested the hourly, you have nothing left up here. This is what should have held to continue to ladder the move. If it doesn't hold, you have to continue laddering this somewhere, and that's it right there. And I think it just pretty much breaks down after that, right? Like it tries to hold that ladder and just breaks straight down. So now you're getting a bit of a clear picture of the polarity, because you've been able to say, okay, well, we started with a 4 hour back here. There was a 4 hour test that hit perfectly. It moves up here to the hourly in the 15, trails up to here to the hourly in the 15, up to here. This is lost. You have a final ladder point that acts as polarity of the move before you lose the trend. Once you lose the trend, where's the level that can hold you? Okay, like down here somewhere, maybe? I don't know, like the very bottom of the move. Very bottom of the move. Imagine, like, maybe you could have justified this. We're just working on one time frame. Okay, fine. Let's just justify this. The untested hold level. Sure, great. Actually, looks like it's what it went after. Pretty perfect. But then, anyways, imagine having to regain this trend. 5% up in one candle. Like, that's the problem with this move, is that it broke the polarity of the move here. So that's kind of the problem of the move, is that the trend you lost was not allowing you to regain the move. Imagine having to bounce this level and move up 5%. Like, does it happen? Yes. Are you sitting there taking a long and holding it with your eyes closed? No. Could you have longed this down here? Yeah. Like, I don't know if it even moves up or down, straight down after this, and moves straight down. Like, that's, yikes. Talk about a bad trade. I mean, I think it's justifiable, but imagine breaking such a crazy trend and then just taking the very first spot, right? Like, it's the same thing that happens when you do something like this and you have a trend like this, and like a large time frame trend, 4 hour. Maybe we can find a daily trend somewhere. Yeah, sure, why not? Imagine having a range like this, right? Imagine having like an interior range. What breaks the move can hold the move, right? Remember, we just said that on trends. What breaks the move out can hold the move out. So imagine breaking this trend up like this and then just like getting over top of it. Like, okay, so imagine this. It's the same thing. Imagine smashing this trend like this to tell you that you're going to go through it for a move up, right? Imagine crushing through this trend and then just losing it and keep on losing the move. Like, you could try it. It's a play you could definitely try, but you would be doing it right here. You would definitely not be doing it on trend. You would be finding a level that makes sense, like an inverse high time frame level. Right? And then here, it's just like, oh, well, probably, so what? Did it go off to the 4? Probably goes off to the 4 right here. A 4 hour backside right here. It's probably going to go off to the 1. Excuse me. So imagine breaking this trend, and then all of a sudden you're holding the piece that broke the move out. This is polarity 101. Like, the move broke and it's holding the move. And then you're still trying to short. It's like, dude, what are you doing? So you got to be careful with that. And understanding polarity becomes a mastering of all techniques, and then understanding things like time frame relevance, trends, origin points, and a quick catch up on origin points for people, or a quick reminder for people who are new, is that origin points act as what held the move down in the past, and what the breakout points are is what can hold it up in the future as kind of the final moment. So you could go to any origin level you want, right? Like right here. Here's a good one, for example. Let's start with a 4 hour. Sure, why not? I think the 4 hour is a bit too short here, but we can start. We can actually find the 1 hour. I think the 1 hour is more appropriate in this moment. You're going to have an origin point somewhere. right here. Yeah. What breaks the move out is also what can hold it up. So when this move breaks out, this is also what can hold it up, which is what you see here. It breaks it out and it can hold it up. So it can't lose this level. It cannot lose this, or the move is failing. So then you can go to the 4. Is there a 4 here? Oh, so was this actually a 15? We might have missed a beat here on this one. We might have not done enough work to find the actual origin level here. This was a 15, right? Is this tested here? It is. It's right here. It's a 15 right here. You can tell it's not here because the first move up tests this. So this is what has to hold the move up in the future. So you can just go back to a higher time frame and that's fine. And that's what it attacks, right? So we actually just missed the move. We actually just missed the origin point of the move. So the origin is created right here, and it's what needs to break out the move, and it's also what needs to hold the move up. So then you get perfect entry. And if this moves up, you can understand that this is the polarity for this trend break, right? So this was the move that needed to hold up. And if this breaks down, you could ladder off of this, right? So then it's the same thing with this trend. So polarity is defined by the moments that you could ladder, not specific theories. Like you can't always say origin is going to be the polarity because sometimes it will, sometimes it won't. Is this what broke out the move? Yes. Then okay, then that can be polarity, right? If it's a trend, it's breaking, then that can be that polarity, right? So it's just something people have to understand about polarity is that it doesn't evolve. Rather, your understanding of how you find it has to be very sharp. That's a better way to put it, because polarity never evolves. Polarity is kind of always there under certain criteria. It's about recycling the information to find, starting from higher time frame down, to find them to find the moments that are creating polarity in the charts. And again, like just as a quick TLDR, in the past couple of weeks, we've been talking about origin points and how origin points are what breaks out a move is what needs to hold it up as the final piece to a move. So when you have an origin level, if it breaks out a move, that's going to be the polarity to see if the move can continue to go up. So that's the polarity defining if it can go up. So then you have to also start defining what does the polarity represent? Well, on an origin level, it represents its ability to either continue moving up or whether it's going to break down and fail the move. So in this moment here, if this didn't hold, if the origin level didn't hold, it would have broken the move down and it would have failed the breakout, as an example. And then you go to the daily time frame where you have your daily trends. And if this is dictating the breaking of the range, well, then the daily trend has to hold as well, and it can't hard close. So if you have a hard close daily under here, but you're staying above the origin level, you're saying that you're going into a new accumulation cycle. It's telling you something different than if you hold this. This is just specifically telling you you're holding the backside of a trend. It was the moment of polarity to attack the range, and it's going to go and attack the range now, which is, come on. Oh my God, my trading view is so slow. My God, guys, like, please tell me you're seeing how laggy this is. Stuttery, so stuttery. Which is now back up and up, up in here or higher, right? Like at first here. Well, actually, at first it would have been here, but that's already kind of back tested here. So this is already tested. So your next range would have been up in here. So this is the problem, right? You always work time frame down. So you're up in kind of the weekly here. You're up in kind of this range here at 57-ish. And probably we all know it just crushes through this anyway, so there's no point. But anyways, I would assume it goes after that, and it does right here. Actually goes after the weekly. So now you're not even, stop. So it actually showed you that it was going after the weekly right here. Hits the weekly level, has its pullback, and then moves up. So this wouldn't even have been valid anymore. It would have been trying to ladder off the range, and then it just goes up after the range at the very top and pulls back. So polarity is not defined by specifics that are preset. It's shown to you in the moment based on the events that are happening. You tried the app. I have, but it doesn't stream capture very well on Streamlabs and OBS Studio. It has a horrible time stream capturing. I agree the app is actually much better than the web browsers, but the problem for me is that it doesn't capture on any capture software. I have to do like a monitor capture, which is terrible. It's like terrible performance wise, and it causes all kinds of problems. Entered long on that last piece level. Does not respect close and open to short right away. So they're losing the range. That short of 59K. Nice. I'm going to catch up on chat real quick here. When do you know when a test is complete? As in a test the hour timeframes below it, but then go to the 15. When any wick or body, that's when it's tested. Any wick or body. And then if you have something that gets really close, for example, I see like, okay, let's pretend here. Let's say there's a level right here, and it didn't quite hit anything, right? it didn't quite hit anything. And then it's like, okay, well, are you going to go back test it in the future? Right? Like, do you have a moment where you just like, oh, it doesn't get respected at all and just drops to the floor? Because that happens. Or do you have a moment where you actually go and you retest the level and then go above it? So this is going to be using your, first off, your trends to see if the trend, if this test, where does it exist versus the trend? Is the trend here and it exists below the trend, so you're losing something much larger, so that the test doesn't really make sense? Or does the trend exist down here, right? Or is it on the trend? Like, this is going to be a good definition of where the trend is, because if your trend is like this, like, don't expect to go test that, and then you lost a trend and you're hard closing on bigger time frames, and then all of a sudden it's like, well, what do you think is going to happen, right? Like that's kind of the common sense, not so common, I suppose. That's kind of like the first thought. The second thought would be, okay, is it interacting with trend? Can the level be hit like this, and then you have one of these moments where it just breaks below the trend a little bit and continues to go over, so therefore you don't hard close, because then this would be more likely. Do you have a trend down here that could go like this? Well, you're probably more likely going to try to dive some level between, or go below this trend to hit like a reverse level here. So then it's always kind of the analyzing of the other time frames information that's going on, and the other levels and trends and the range that's going on, and what had happened previous to the move. So in order to best assess, like if you've just missed a move like this, you have to look at the overarching picture of the entire scope, because sometimes you're going to be breaking below a trend, and it's like, how could you possibly break below the trend, test this? It's like, okay, you have to go over the trend, and then like, you're going to have a big dump if you start hard closing big time frames under a major trend. So that would be like the first, like, obvious one, like I said. So then you need to look at what exactly is happening on the other pieces of the move to decide if it makes sense to go after that level again. Like, can it hit a reverse level? Is it holding above a ladder point? You could take a trade there. You could ladder point the trade, but just have a tight stop loss, right? Define whether your stop loss makes sense. In your stop loss guide, it doesn't make sense for it to be a high risk stop loss, a low risk stop loss. Doesn't mean you can't take a shot at the trade. Sometimes it's going to hold, sometimes it's not. Maybe you might miss something. Maybe it just respects your levels perfectly. But then your stop loss guide can help you define like how much risk you should be willing to associate with that. So there's nothing wrong with taking a shot on some of these levels. It's just overarch it or oversee it by your stop loss guide. And anybody who's new to this stream, you need to refresh your stream once an hour. So that's why Starlight is saying refresh your stream, because once an hour, it starts lagging for some people. The Vimeo servers are kind of crappy. So refresh your stream. We'll take a quick little 2-minute break here while people refresh their stream, just so they don't get lose signal or get cut out. I mean, that's kind of always, people go through like a shock moment where I find this a lot in mentorship, where they go through a shock moment where everything they had thought was happening is completely turned on its head. So people come in and they say, oh, well, my hold didn't get respected. How come? And then there's always a reason. Like you can literally map out 99.9% of the charts. Like there's people in this group who have been here for like 3 years now, and they see it. They've seen it since day one. So there's kind of always this epiphany moment that happens where you kind of just, things start clicking, everything just starts making sense, and you're like, oh wow, that's incredible. Like it's a lot to learn. So yeah, I mean, exactly. Origin points act as points that can hold up the moves in the future. Like, a good example of that one was back here. I believe it was this 4 hour. This was a 4 hour origin level, and this was what was going to hold it up in the future. I believe this was the level. I could be completely off base. I'm just going off of memory here, just going off of visual patterns. Might have been the range lower, maybe even. Actually, I think it was the range that was even lower. I think we're not far enough in the move, actually. Anyways, we've done this like a billion times. Oh yeah, it was right here. There it is. And so this is what had to hold the move up before attacking the range, right? And so this goes after the range. So like a lot of people weren't sure like what this was, and come on, a lot of people weren't sure like, why is this holding here and it's breaking the ladder? I don't know, because it was attacking the piece that could hold up the move, right? So like there's a lot of stuff that people have discovery in mentorship. So it's really cool. I have a question. It appears that a monthly origin has been created. Does that hold any relevance? Take a look. I never answer things in a yes and no way. I never answer things as in yes, no. Like, oh yes, it must, because this is, I always take a look first. Like that's, so first off, I think you must be talking about, we need to delete this because I can't see the top of the candle. I think, Mio, you must be talking about this, yeah? Yeah, that 4 hour, you spoke about it last week. So I think you must be talking about this monthly origin. Now, the first thing I would do is I would define if this is the actual point, because this is always going to be something where people are like, okay, well, there's an origin level, right? And so like you define it right here first. This is where you first define it, because there's some kind of moment that happens here. And you can't define it here because this is attacking something else. So you're actually scaling back in the move right here. So you're scaling back in the move to find the actual origin level, which would have been this on the daily, right? It would have been this right here. This is the level that gets attacked. You can see it first happen there. So that would have been your origin point right here, right? For this part of the move. So if I was looking at this and saying, okay, first off, is there anything else? Well, there's also this back here. Like, was this the first point? And then so we have to go do that same cycle again. Nothing right here, right? Maybe lower time frame. I should just use a replayer tool for this one. Right here. Not really an origin, is it? No. There's nothing that dictates an origin back here. I don't know if I'd dictate this as an origin. There's no real rejection in the move here. If anything, now I'd be down time frame even more. You'd be down something like this. Can that be an origin? Let's use a replayer tool. I'm getting tired of going back and forth here. No, you don't really have an origin on the 4. Thankfully, I have TradingView Pro, so I can access a lot of these candles from the past. About this. Your origin point. They don't think this is going to hold any monthly relevance, so I don't think I would be using this. That would be your origin point right there. What breaks the move out has to hold it up, right? Like that would have been in the moment. Like this is the origin. This needs to continue to hold this level. I'm assuming it lost it, right? So you guys see how it just instantly snapped down once it lost this level? That's because it was the origin point to the move, right? So you guys saw how I found that, and that's what has to hold it up in order for it to go for a new move up, right? Like that's, again, just the same thing we've been looking at, talking about origin point, and it has to go over top of it and hold it. So then you get the creation of the weekly. So, the first thing we can do is we defined that this is not needed. Actually, that's what snaps the whole move down, isn't it? Yeah, that's what snapped the entire move down. Yeah. So yeah, origin point is lost. Is this thing still going? Dude, pause, please. Origin point still going, hits an inverse, very simple stuff. So the first thing we did when looking at this monthly origin is say, okay, can this define something? We have to work backwards a little bit to say, okay, did we miss something here? Is there anything here that could possibly be the origin point? And there's not, actually, there isn't. Maybe if we could find a 4 hour or a daily that respected perfectly and it had multiple rejections, and it had this kind of like, maybe if it was here, for example, and it's like, oh, it went up, it tested, it broke down. This is a clear origin level. So the first thing I would do here, Miho, is, oops, I just deleted something I wasn't supposed to. The first thing I would do here is I would just define the smaller time frames first to see where the origin actually exists, right? Like that would be my first job. Now I would just take the replayer tool off and say, can this be an origin monthly? Oh, that would be really tough. We're on the weekly. Let's see the monthly. That'd be really tough because it doesn't really hit the level and pull it back. Can it be? Yes. I mean, it feels wrong to say this because then you could just almost be like, well, it's just a head and shoulders, right? Like, isn't this just left shoulder, head, right shoulder? Like head and shoulders is not completely obnoxious. Is it a pattern that just can't really tell you anything? Yeah, it's a pattern that can't really tell you anything. Could this potentially be like a head and shoulders in the future? And I never use these terms. I never use these terms. They don't do anything for you because it's not the definition of could this be a head and shoulder in the future? Yes. Could it be an origin level in the future? Yes, if it's hit and pulled back. But you have to see what's happening in the moment before you can decide that, because this is a case where you don't have a very, very obvious, clear first test of this level, pulls it back, struggles to get over it. In the future, it breaks straight over top of it. So I would say the chances are less likely that it's going to be an origin. I think you have to dissect what's in here and what it's attacking and the trends it's creating first, because it could simply do this. It could create a trend like this to here, go over top of the trend, and then hit this level and be like, oh, that's an origin level, and it loses trend. Or sorry, it would have to be maybe a little higher like this, and it could be like, oh yeah, it hit that level, pulled back, and it lost its trend that it created, because this here, like whatever this point is, wherever that reach point, attacks an inverse level somewhere in here, right? Like it attacks some kind of inverse level here, which makes a trend, which then is the perfect setup for it to go over top of trend, hit this level, pull back, boom, you got head and shoulders. Was it an origin level? Of course it was, but you can't say that right now, because you don't know what's happening with the move. You don't know what inverses are being attacked. You just simply can't. It's not clear enough for it to be an obvious quote unquote head and shoulders, right? It's just not clear enough for that to you have to see what's happening in the move to say if this is going to be an origin or a breakout for the future. Could it be? It could be. And then so you get like, oh, this is head and shoulders, right? Like, but that's not an obnoxious thing to say. It's head and shoulders. Like, we don't use those terms because they're too basic and they don't really do anything for you. But at the same token, like, how do you think head and shoulders patterns get created, right? They're just like this. So could it be? Yes. Will it be? We can't see that far yet, right? We can't see that yet because we don't know what this is attacking. So I think that's like a really important thing to understand with a move, is that it's more important to understand the architecture of the current spectrum than rather to say like, oh, like I would define this, and it's hard for me to say that this can be an origin, because the first thing I would do is I'd define if there's something back here first, which is the proper way to go through the flow of the chart. It's recycling. So it means that the higher information has to recycle down, and the higher information is the time that happens first in the charts, because that was first created, therefore making it in existence longer, therefore making the hierarchy of the higher point, or the hierarchy of time, it happens first. So it's been in existence longer. So there's the horizontal hierarchy of time and there's the vertical hierarchy of time. So that's why you look backwards first to see, is there anything that supersedes it that makes it an origin that failed? No, we already looked at that. There was the 1 hour that dictated the entire dumping of this move. And then there's the top of this, which actually doesn't fit the criteria to be an origin level. But that doesn't mean it can't hit this level and reject in the future. It depends on the setup of your trends and your inverse levels that get hit that create the cycle. So great question. Really, really tough answer. Hopefully that helps you. That helps everybody. Okay, let me catch up on chat here. Still catching up on chat. You'll know it's over when everyone starts to say goodbye. If you get hit with a random stream offline, you need to just refresh. Audio seems desynced when the video is refreshed. Okay, good to know. For the new people, I mean, Finance app and Trading View are resource eating softwares. They really are. They really are. Firefox at a 720p should be okay. Oh, great tip. Actually, yeah, you can use Firefox. I didn't actually know you could set your resolution straight to the app. That's pretty cool, man. That's a great tip. I use Firefox specifically for development only. I don't use it for any like viewability or anything. Wish I could have stayed in the short. Oh, Kartik, you had a crazy short. I wish you stayed in too. Why not accumulation candle before value? Why not this one? So you just want to see where the origin level exists. That's why we kind of had to go backwards here and do these 3 candles here. Like you just have to go back in time frames to the things that are happening first. Highest time frame back in time frames. Break the monthly uptrend. So you're talking about like the trend has to break for it to attack that level. Well, this is true in this case. That would have been right here. That would have broken that trend. MD. Thanks, Con. You're welcome. Hopefully that helps. I'm not sure what this is, MD. What am I looking at here? Like this is an origin? Is that what you're alluding to? I believe. Not 100% sure what this is alluding to. The start of the origin right there. What time frame is this supposed to be from? The weekly? No, that can't be an origin on the weekly. There's no test and rejection of it. It just kind of goes over top of it. It doesn't really create it as an origin. And there's no valley there either. Like, it doesn't fit the criteria of being an origin. 2 candles. It has to be 2 distribution candles. This could fit the criteria here because it's 2 candles. But then there's moments back here that are telling you if it's an origin level from before that's getting rejected. Yeah, no, it has to be 2 candles. It can't be the origin on the weekly. It'd have to be 2 candles. It could be 2 candles on a smaller time frame, but not that I saw. Everything else looks like it broke above it and tried different ranges.
So you're already like giving yourself the wrong information to start with because you can't see the polarized moments, okay? So this right here, we can see 15-minute. Well, there's no polarity to be had there. So if you go to the 5-minute for me now, right? Okay, so fine. We can mark this level on the 5-minute, right? We can mark this. So start move this here to that level there. Nope, you leave that one. That's the 15-minute polarity, which we've already tested here. That's fine. Let's find the next point. Yep, right there, which is perfect. Go to the 3-minute now. Great, go to the 1-minute. Oh, there it is right there. That's the latter point, right? So this is the problem right now. Now delete this level. You guys will go like this and look back this way. You guys will be on a 1-minute time frame looking back and saying, oh, this is the final level. There's nothing tested. Mark this for me. Move forward.
This is just decycling and trailing down right now.
Okay, perfect. So then this is the next level. Mark that for me. Perfect. Yeah, that's good. Mark this one for me. The body. Yep, perfect. That's good. Mark. Well, we can mark this one. That's the next one. Mark that one for me. Yep, gets hit there. And then increase your screen size. Scrub it for me there. So you've created a situation where now you're in this trade. Okay, and you can even mark this one here now too. So this is what's happening. You guys are here in the 1-minute, right? And you guys are sitting here saying, oh, there's no more tested levels above this. I should long, right? So now what you guys do is you guys go to the 3-minute because this is what you guys are doing. You're working forwards in time frames. Go to the 3-minute. And you're already in this trade saying, oh, look, there's no untested levels. They're all tested. And you've worked up and you've made this decision the wrong way. Because you're saying that the 3-minute creates polarity here. Because you're saying, look, we've got a tested level here. Can't be that. Let's X all the levels. It can't be. Can't be this one. Can't be this one. Can't be this one. Can't be this one. Can't be this one right here.
The X's are tested, is it you're talking about?
Mm-hmm.
Yeah.
Yep. Can't be, and that's it. You could have potentially had this here, and it can't be this one. So now you guys are in this trade saying, oh, there's no more tested levels. We're in polarity. Because you worked the wrong way. Because what you did is you said that interior is on the 1-minute, exterior is on the 3. So when you guys go through higher time frames, and again, like I said, I've seen everybody do this. Okay, I've seen everybody be in a 1-minute chart, and when I say go to a higher time frame, you guys go here, and then you guys go here, and here, and here, because you are trying to justify polarity in those moments, right? You are trying to justify the polarity based on a time frame that's inaccurate. That's what people are doing right now. If we do the same thing and we go to a 1 hour to start, let's start there to create polarity. Now let's start the other way. So let's mark a level.
This is a really interesting comment from Starlight that I want to tackle right now. Usually I wait for a breaking point where I want to talk about something in the charts, but this is a really important and interesting concept. There's 2 axes on our chart, and I talk about this very early in Future of Trading, the horizontal and the vertical axes. By the fault of being human beings, we are so hyper-focused on one axis. We are so targeted in a non-heuristic way. Like, heuristic training is when it's abroad. Like, the way I view heuristic training is if you were going to learn something, the heuristics would be creating a roadmap, right? Like you create a roadmap of all the different things you want to tackle. Like right now I'm taking vocal training so I can make better content in the future. So I've enrolled in vocal training because I want to be able to speak better and copyright. Nice. I want to be able to deliver my messages better in the future to my audience. So right now I'm enrolled in vocal training. So I took a look at all the different things that I need to get better at: clarity, resonance, breathing, all these different things. And my throat is killing me and I'm breathing like an absolute weirdo today because my throat is so sore from doing this stuff this week. And I'm just like, my throat is fried. And heuristic would be taking a look and building a roadmap. Okay, I have to do 1, 2, 3, 4, 5. Like there's these 20 different things, right? And targeted training would be then breaking down the heuristics into a much more specified topic. So saying, oh, I need to increase my resonance. Okay, let's target resonance. Let's do targeted training on how to increase your resonance in your voice. So then you would go and you would do all the things in resonance. So there's a very heuristic way of looking at things, which is always kind of creating like a map of something that you want to accomplish in life. Heuristically, you have all these broadened aspects. Targeted, you hyper focus down on one thing. People, by no fault of their own, do targeted information and targeted training. We all do it with everything in life that we do. We all do it in all aspects. The energy session was long yesterday. Energy drainer. Yeah, it was for sure. Getting back on Twitch for the first time was no easy task, but yeah, whenever we look at things, we look at them in a very targeted way. We want to draw a trend. We want to see that trend break. This is targeted information. We want to see a level hit. We are targeted on levels. We look at things in a very targeted way. By no fault of our own, this is just what grabs our attention. It's what keeps the attention span excited. It's what makes things fun, which makes you learn more. It's just for a bunch of reasons. Targeted information as human beings is what we do. So a really important thing. And it's kind of like a hidden gem, actually, in the future of trading. When I talk about the horizontal and vertical axes, people are so focused on, even if you were to understand that charting is all about decycling, like we've been talking a lot about that in mentorship, like the decycling of information, where things start on a higher time frame and they decycle down, right? Realize that there's two axes that things decycle on. There's both the horizontal and the vertical, and it's where people fail to see a lot of information, is by not understanding that we have two axes on everything we do. So when you're talking about time, when you're talking about what can be created first, there's a decycling that happens in two ways. There's a decycling that happens. I'll just do it down here because we're running out of space on these charts and it can only get slower. Can't get faster the way we're doing things. Okay, so there's two parts of decycling, right? Information, right? There is the vertical axis, which decycles like this, which means that we look at the highest time frames down. So this would be like, we look at the 4 hour, and this is very much like the vertical way to look at decycling, right? And there's also the horizontal way in which we would say, okay, here's a 4 hour. There may be a 5-minute level right here. So technically we should use a 4 hour. That's only looking at one axis. This actually existed before this, making it be in existence longer. So this, without having time frame, is like a hidden 4 hour level. Butterfly effect 2 stuff. Again, a bit of a spoiler today, but when you're thinking about time and space, well, technically this is the 4 hour level, isn't it? Because this is in existence for longer than this 4 hour level. This is just the 4 hour candle across the vertical axis. Well, what existed in a 4 hour time space over the horizontal axis? So people have only a one directional way of looking at this. So when we look at origin levels, we have to work highest time frame down. Oh my God, dude, this flag is killing me. It's worse than my throat. We have to work highest time frame down and also information back to move forward, to find the balance between what exists highest time frame if you're combining both theories. So what can exist the longest and the highest is a bigger hierarchy than just what can exist as the highest. It's a little outside the scope of what we've taught, but that's okay. Again, a good concept, and it's why I wanted to highlight what Starlight said, because it's a good understanding moving forward into the training that will come out in the future, that there are multiple axes that we work on, and there is hidden information on the charts, which is sometimes why I can see things that other people can't, because there are hidden information on the charts where we go like this and we say 4 hour candle. People are reading this, they're reading this, they're reading this, because this is what they're chart is showing them in a 4-hour spectrum. What they're not reading is how long it's been in existence this way, and not just the tops and bottoms. They're reading it what's going like this, what's moving up and down, and they're not reading it from left to right because you can't, because it's not on your screen. So targeted, non-heuristically, we look at a chart and we say, oh, of course, here's the level here. Jesus, that circle, this leg, there's a level right here. Perfect. Awesome. But then heuristically, there's other information that exists that you can't even see because it's not programmed to show you it on the charts, right? So it's a really, really important thing that Starlight mentioned that, because again, moving forward in the training, it's stuff we'll get into in Butterfly Effect too, where we start talking about the stuff that you actually can't see on the charts, but is still there. But unless it's told to you, like what I just explained, probably makes perfect sense. It's like, oh my God, how come I never thought of it that way? Well, it's because you're targeted training. You're not training your mind heuristically, as there's broader information that you simply can't see on the charts. But it's common sense that's not so common. It makes total sense, but it's not common sense. Of course, this makes sense. It existed first. So how can something that exists now, even though it's a higher time frame, how can that moment be of more importance than something that existed before? Because that's older than it. So if it's older, technically it should be a hierarchy on a different scale. Well, it is. It's common sense that's not so common, which makes it called total sense. It's total sense that this is exactly the way it works, of course. But unless you're told it and shown it, it's like, well, okay. Right? Kind of one of those moments like, oh, it makes total sense. I like that word because it's kind of the thing where it's like, oh, it's common sense that's not so common, so it's total sense. It's just something I made up. When I talk to my wife and I just tell her about these things, and I'm like, no, it's not common sense. You're right. It's not. You're like, oh, it's so simple. It's common sense. I'm like, well, it's not really common sense, because if you don't know about it, then how can it be common sense? So it's kind of like just total sense in a way. So Starlight, common sense is not so common. Nice. Okay, let's get back to it.
Here. Okay, good. Go to the
It's
next one.
just quickly. It's the way we have to look at origin levels to understand them better. It's the layer in which we look at an origin level to say, like what you guys saw me do was going through it in a different way. Like you saw me working through that origin from the highest point down, but then also working backwards to forwards. It's how I discovered origin levels back in the day, by understanding that there's a time capsule that encompasses this mixture of tests, right? So I worked top down as my first axis, but then moving backwards to see if there's top down information, like this, like you work top down, and then I'm seeing if there's top down information that's older than it, that can also be a higher time frame, making it kind of a more aged level, I guess would be the right way to put it, because it's aged because it's older, which makes it hierarchically different.
Frame down. And you're saying, okay, polarity exists. Okay, polarity.
It is one of the
exists.
reasons
Let's
why
go to
reverse
that.
levels are so important.
Yep, good. Now we can delete this because that's tested. Because this isn't going to be tested.
It's one of the reasons.
No, and it was tested in that moment, right? Like the hourly was here and it was tested right here, which is fine.
It has a different hierarchical scale.
So we can simply go to the 15 and start the highest ladder point. Okay, that's tested there. Perfect. We have our first point. You can mark this now.
Much of that hidden info can be seen by going on to lower time frames. I don't know if I understand this question. It's not a bad question. I just need to read it a few times. Sometimes my brain works like that where I don't understand the question. How much of that hidden info can be seen by going on low? All the information can be seen by going into time frames. So all of it.
Can move it to right here.
Don't worry, Joe. Not a bad question. This happens to me often. It's just the way my mind reads things.
Delete this one. We're just going to work with the same level, right? Now you can take the 3-minute now, and this was tested right there. Just to illustrate, anyways. That's fine. You can go to the 3-minute. This was tested here, right? So now you can go to the 1-minute.
Beautiful stuff. Thanks, Lagan. It's a good way that people need to start thinking about the charts. Again, too often we are hyper targeted into what's in front of us, not realizing that these charts, they can exist on exactly 2 axes, the horizontal and the vertical, which each have an independent relevance, right? They each have their own, like I said, hierarchical value. It's just connecting that to make sense of it is the tough part to making it all work, right? But again, it makes total sense. I love that saying. It makes total sense. It's a common sense that is, once you learn it, it's like, oh, of course. And it just instantly makes everything so crystal clear. And it's like, well, it's not so common, is it? No, not really.
Ladder. right? Because you guys are working the wrong way, trying to justify all
But
these
what I was saying about
untested
trends last week,
precedents.
yeah,
Being, go to the
absolutely.
hourly here. All of a sudden, it's an untested
It
level.
really helps with the understanding of ranges too.
Ladder, ladder, ladder on a bigger time frame. The key here is ladder, ladder, ladder. So anything that doesn't reach this can ladder this move down. So anything inside of there can be a hold level on a larger time frame. The key being is that there's only going to be one final level, which was this 1 minute right here. That gets hit and respected. It's just simply ladder, ladder, ladder. If you go to the 4-hour chart here and you mark your trend now from, oops, sorry. Yeah, you could just mark your 4-hour trend. You know where to do it. Wrong tool. Yep. Top of the move, right? Now go to your smaller time frame, 1 hour.
Is that last blue candle not testing that hold cotton, and does that not matter because it held? Is that it?
Which one?
The very last candle there has wicked to that hold level, yeah?
Wicked through this hold level here.
Yes.
Okay. So what's
Well,
the question?
I suppose it doesn't invalidate your ladder, so you don't worry about that too much. It's held. The whole level is held.
Yep.
Yeah. Okay.
Again,
I suppose my question is that last candle has actually tested that whole level, but the whole level has held, so that's good enough.
Mm-hmm. And
Okay.
you simply have your trend this way too, right? Like, again, exterior moments defined by interior events. So it would be right here. Hard close that properly. Exterior moments create polarity. Interior moments decide polarity. So what you guys are missing here, you too, Delbert, when you're saying like, oh, this was tested. Exterior wise, it was not tested. Exterior moments create polarity. Ladder, 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 right? Interior moments decide polarity. Polarity is discovered on exterior events. So if you work,
It's important to know that, again, just going over that again for the second time in this video, interior moments are defining polarity because polarity is always defined down inside of the move somewhere. So even if we were to look at Bitcoin right now, first thing we need to do is kind of get rid of this stuff. I don't think we were using it for an example before, but we're not going to be using it now. So let's just like get rid of all this stuff that we have here. We don't need any of this stuff. Kind of pretty much just delete all of that. Let's look at what Bitcoin is doing right now. So first thing you do, start high time frame down, okay? Break level of move does not hit. Great. What do we have? Daily level here. Your daily level is tested there. So we're working forward here because the next part of this is here because this is daily's already tested and we're working forward. So the first thing we need to do, we need to update our trends, right? We're going to do that high time frame down. It's going to be here, which is losing of the weekly trend. That's okay. So we're just going to go here. That's fine. That's going to be the daily. Can't remember why we have this one so thick. I know we were talking about this trend quite a bit. Here, then it would have been to here, and then it would have been lost to here. And it's lost that trend now, and it's just establishing the next part of its cycle. So I'm comfortable putting that there. Okay. Moving forward in the move, you have the test of this backside 4-hour here as well. I'm looking right here. You have the test of this backside 4-hour as well. So then you can move forward in the move to right here. This is 4-hour, which is also going to be right there. This can accompany the test of the 4-hour as well. So for that reason, even though this would be the right trail to go right here, we're just going to go to this one because the top of this can actually be, it can hit the base, and the base of this is below this and that. So this is starting to look like kind of the right spot to go after the move. If you were to go high time frame down, you know that this daily here is already tested, right? So you know that this is already tested. So immediately you would be somewhere inside of this candle. And we're going to color code these because this is getting a little much. So inside of the daily candle, where do all tests exist? So you would have backside 4-hour here. You would have 4-hour right here. Again, we know that it could be as low as this as high as that, and as low as this in this one, and as high as that. So if you were to wick down and test this level, it would hit all the criteria of everything thus far. It would hit the daily, it would be above the break, which would ladder the move. It would be hitting the backside and the front side of the move on the 4 hour. Is there anything on the hourly that also has kind of like a combination in here? You do. You have this here. You have this here, which I like a lot less. If I was taking this move in this scenario, you have two spots of this move you could take as well. You have the greediest point, and you have that. This point right here in a knife catch suffices as both the test of the backside and the front side level. They're not independent of each other, right? Like if you were to go after the 4, you'd probably just likely go after the backside 1 if you wanted to go after this 4 because you thought it was being hit, and you don't really need to go any time frame below that. So you have everything from this move that encompasses this could test the daily level. So if it's going to test this daily level, the point is that it has to hold over top of it, right? The point is that it has to hold over top of that daily level. Let's go here. Don't want to have a spoiler yet because I actually haven't looked at this move yet. Oh, geez, come on, man. I haven't looked at this. This is my first time. So then you want to hold over top of this level, right? But this is not the part of the move. We're not even close. Okay, it's up here in this range. So you want to hold over top of this level. So you have to hold over the hold level. You're going to go red, and this is what it has to hold over top of. So we know that in this move, let's do it like this. We know that in this move, you can test this level. You could test this level, right? You could fall to the 4, the daily greedy point, down to the front side 4 hour range, because this is the 4 hour backside here, so it's not necessarily. And if you were to bounce off of this, you would have hit the daily level, closed above it, and completed the test of those. You take it one step further, you can get even a little bit greedier, and then you can go after this 1 hour backside. I don't think I'd go as greedy as the front side, whether it hits there or not. I know it goes pretty deep in this range, so I think I'm working a bit against the grain by picking the higher level, but in this daily level here, you could test and deep dive the daily level as long as you're coming back over top of it. So then this is how you would look at the move, right? Like it's very straightforward. This is how you would look at the move. Take off that replayer tool. And it does. It actually goes even deeper than that. Jesus, that is just ridiculous how deep it goes. Pretty much just stays over the ladder point on the daily. That's so crazy. That's ridiculous. I probably would have got out of this trade. I probably would have missed this trade because I don't think I would have gone any greedier than this, which is fine. It happens. That's ridiculous, though, how deep this thing went. Actually, this is a 1 minute candle. You wouldn't have. Yeah, you actually would have still been in this trade because you wouldn't have market closed. Actually, you would have been in this trade. Yep, you could have taken any one of these levels and you would have been in this trade. Yeah, this is not a market close. That's only limit closes, and you never limit exit for this reason. You always market exit. So actually, you wouldn't have been liquidated. You would have been in the perfect position. And yeah, it's actually good. These are 1 second candles, so that's how I know it wouldn't have been a limit market close. It's just a limit trigger, but we always stop market, not limit, for this reason. So that's good. Would have been in the trade. One of the benefits, one of the only benefits of doing market over limit. 41.2. It was a good one for me. Jesus, dude. No kidding. Deep dive scenario like this, are all these levels then invalidated if they hard close away above the daily? Well, then you're in a candidate for reverse levels. If they're closing above the daily, then you're in a candidate for reverse levels. But taking the daily at face value here is like there's so much deeper inside of that range, because really all you have to do is not lose the level. Because if it can create reverse levels, think about it. If this level can be created as a reverse level in the future because the level gets held, right? So you can come back and dive this level again. If that's what's happening, then you can just go deeper in the range, because the only criteria that moving forward past this 1 second moment, the only criteria that needs to happen is it needs to break back over this so that in the future, this can be a reverse level that ladders the move, right? Therefore creating like a range like this. It can be a reverse level that ladders the move. So as long as this holds, playing this daily hold level would have been so high up in the range. It's crazy. Like it's really high up in the range. You could even go as greedy in the range and say, well, here's the break level. As long as you ladder this, you're good, which you would have been technically accurate as well. Or you ladder this and it's kind of back laddering all of these things back here. So as long as you don't hit the break level, you're good, which is basically like this would be the greediest part of that move. Like there's a lot of components inside of this daily that, again, as long as it breaks over top of the daily, you have the perfect candidate for reverse level. And then the same with the fours as well. You have perfect candidates for the reverse level. So it doesn't even have to respect the 4. And that's why I went down to the hourly, because you're not going to have a huge dump like this. And it's like, oh, created the hourly reverse level. Like, is it possible? Yes. How likely is it? Like 1 in 100. So it's not a scenario I like to propose. But then to be buying the daily or the higher 4-hour range, I don't like it. I like the lower 4-hour range, and I like the 1-hour holds for this reason, because it can create a deep dive in the future, especially when something is moving this fast. Create a reverse level off this deep dive. Again, because all it has to do in order to create a reverse level is just hit the level and close over top of it. So it's kind of perfect. It's kind of like the perfect scenario. Tested a weekly backside. I wonder if that's what happened here. Distribution. Here, right? I'm not sure if I'm following the same one. Orca, maybe just that it get adapted to the daily. I wouldn't use this at this point. But maybe maybe I'm not seeing what you're seeing.
Your time frames from this.
Okay, anyways, getting back to the point of this, the lowest time frame in here is going to dictate the polarity, right? Remember, just interior moments dictate polarity. The interior moment to this is a smaller time frames inside of it. So these moments are going to dictate that polarity. Also going forward in the future, right? Like the lower moments give you the moments in the moment that dictate polarity. Monthly trend? I'm not sure. I haven't looked. Monthly trend? No. This wouldn't be. No, you'd have to be. There's no monthly trend here. Be like this, right? Be like that. You break over the monthly. It's pretty. It's very, very early for it to be. Yeah, no, that's just coincidence. You wouldn't be using this. Hold level. Did I read that wrong? The backside. Oh, backside hold level. Weekly backside. Weekly backside hold level. Not as important here. Not as important. What's more important is understanding if it can hold this ladder that it's created. The weekly backside can be. The weekly backside you'd use would be this one. But then, like, what's inside of that range is a lot, right? Maybe monthly. I think you said monthly, right? So it's tested its monthly level already once. It's tested it again now. Yeah, no, I wouldn't use this either, because the range is just so big inside the monthly that it can just go so much deeper. Can it close over top of that? For sure. But it's so big right now that it's, I think rather what's more important looking at this is now we potentially have this for the future. Go like a gray. Let's go gray for this level. A little kind of like hidden, like people won't really see it. It's hidden, right? Is it more important that we're just under the daily backside now? No, I wouldn't be looking at backsides too much. I know we've been talking about backsides today, but in this moment, I wouldn't be looking too much at backsides. It's important that we're just under the daily backside now. The daily backside. Let's see. I believe backside wouldn't be on this side right here. There's this, but I don't really feel like this is what you're talking about. Daily backside. Maybe upload a screenshot, because I'm like, there's a lot of stuff going on in chat, and I don't know which is what. Is this chart accurate for lick prices? Let's take a look. So okay, for liquidation, There's limit and there's market liquidations. A limit liquidation happens when you enter the price yourself, right? Like you're in control of when the trade is sold. So you say something like this. This is kind of important to talk about, actually. You say something like this. Okay. This is a lot of levels. We're gonna get rid of a lot of this stuff. So we're gonna get rid of this. We're gonna get rid of this. We don't need that. Trend we can keep. This daily ladder point we don't need. This daily front side question mark. I'm not sure. Okay, that's fine. This is good. Like a limit stop works like this. A limit stop works like this. If you have a buy here for a long and you limit stop right here, when this price gets triggered, regardless of how fast it gets triggered, you are saying this gets triggered, sell at whatever price. So it will sell. A market sell will be like this. You could be right here in the moment or right here, right? You could be right here. A market sell, the price has to go to that market price. So as an average across the industry, because that's how market prices are dictated, it's the average across the industry. So on BitMEX, on Kraken, on KuCoin, the market price is all of the exchanges prices averaged out. So if you have a market stop and Bitcoin went down to here, right, but every other exchange stayed up here, you would still be in this trade, even if your liquidation was right here, because the market price probably only did this. It probably went like this, and Binance might have dragged it down a little bit, and then it stays above, right? Because every other exchange is up here while Binance spikes down here. So when you get these nasty 1 second spike candles, like 90% of the time, you don't get liquidated on them when they're this radical, because the market hasn't caught up to that price yet, and the price is already above where you are. So Binance spikes down. It's too fast to generate a market price. It comes back over top, and then this is up here, and then the other exchanges are coming down while this is already bounced back up because they're reacting to Binance, but Binance's market price has pulled it up and above enough to keep it up, but not enough below to enter a market liquidation price. Yeah, does that make sense? That's the difference between market and limit close, JP. Hopefully that makes sense, because market is based on the market price. That happened to me yesterday. I saw minus 250 for a brief second, didn't get liquidated, and I was to sell that bounce for 150%. Yeah, exactly. That's why we use market liquidations and not limit liquidations. A limit liquidation, you're selling for the same price. Because if you have like a limit liquidation, like, a limit stop, for example, say you have a limit stop right here, right? And you set your price to down here. So in the past, they used to never charge you a fee. Like this was kind of like a Binance hack, because in the past, what had happened is you could just hit the sell button, right? You could just go like on the Binance screen itself, you could just enter whatever price you wanted. Like you could enter $1 if you wanted, and then you could just enter limit $1 sell, and they wouldn't charge you the market fee. Well, this was like an error in their coding for a while. So people were taking advantage of saving that small little fee that you have to pay for the market price, because the market price costs you a little more. It costs you a few extra % more to market sell something. So if you have a limit sell right here and you say limit sell down here, it doesn't matter. It's still executing a market sell. You're just executing a market sell based on its limit price, right? So you're just executing a market sell based on limit price. So it wouldn't matter if you want to say, oh, limit sell right here, you're still paying the market fees. So this is why we don't use limit sells to avoid situations like this, because there's no downfall. There's only a downfall using a limit sell here, and this is the scenario it hits, where it like bounces instantly. And this limit was hit, so you market sell based on this limit, and the market sell just executes wherever it can fill, like it just executes down. But a market sell, like a market stop, it won't actually execute because it hasn't met the criteria for this. If this is your market stop, if this bounces for 1 second, it's too fast and the market hasn't reached that price yet. And then by the time Binance picks it up and all these other markets are dumping like this, and they do that, Binance is propping it over top of the market price. So there's no real advantage to using like a limit sell in a liquidation scenario. You just use market for this reason, because there's an upside to using market regardless of the fees. It's just that back in the past, there was like a coding break in Binance, and limit sells were getting, like you could do like limit market sells and only pay like a limit price. So it was just like an error in their coding, but they fixed it a long time ago. Next time I Next time one, you set limits with me. But this is wow, I didn't know about this. I've been wondering what to do about these crazy deep dives. But this is like a 1 second scenario where it's like boom boom, right? If this is lingering around here for a few seconds, realize that if it hangs around for 5 seconds, like all the exchanges will have time to catch up, and then the market price tanks with it. So the market execute will be also hit. This is for like boom boom 1 second scenarios like this. Does a market sell then increase your risk if a long, wait, let me read this. My brain is not intaking this. Does a market sell then increase risk if a long goes down since you're still in the move as it falls? Yeah, I mean, you pay more fees to get out of the trade. So you're paying a higher fee. So I don't know if it increases risk. I think that you're just paying higher fees. You're just bleeding money for no reason. Monthly uptrend, not backside. This right here. That's not the right tool. Right here, which would then be this right here. Talking about like this right here. I wouldn't vote any importance to that. The only thing I would vote importance to is this like daily or possibly the creation of a range trend. Yes, makes sense. Perfect. This, now I know my ABCs. This market sell then. Okay, good. We're all caught up. Okay, let's continue. Really important stuff actually in today's chat.
Down, you will find polarity. If you are working them from this side, you will not find polarity. So that's why you're not seeing that, Delbert, because you didn't start with the highest time frame. You're too interior in your move. You're sitting there on 1 minute charts saying, okay, this is polarity because it was tested. So that's already tested polarity, but it's not tested on the large time frame. So polarity can't exist there. All you have is a decision that's made based on polarity. So do me a favor and take the replay tool and cut it off right there.
I guess there's higher time frame 1 minute or whatever, 3 minutes above that haven't been tested on these higher time frames either. Like, where do you stop? You know, to be constant.
Nope. Look, ladder 1, ladder 2 in this moment. You have
but it could come up to the first ladder. It could come back up to that first ladder and ladder off that, you know, or even go above that and ladder off something else again.
Well, if it goes
where
above
do you
this,
set your stops?
If you go above this, this is polarity from a larger event, right? Now you're too interior again. So you're getting into the same problem over and over and over. If you're sitting here justifying ladder points here, you're too interior to even the bigger event out here. So your polarity is created exterior, which is right here. That's polarity because that's created on the exterior, right? So then if that's polarity, that means you go above this level, you break up to the next range. You stay below it, you short. So you're getting into the same habit, trying to justify what's inside of here to the entirety of the move. Because there could be a hold level in here, but that doesn't create polarity. That's not where polarity is created. Polarity is created from the exterior. So even right here in this moment, if we were in this trade, ladder 1, ladder 2, and we have a higher time frame trend. So if this is true, we know that this is already tested. So you can actually delete that level.
This first one?
Yep, you can delete it. It's already tested. So this is the only level that matters right now. We're on the higher time frame, right? We've created polarity on the higher time frame, and we've found it on the interior moment. So if you go to a 1 minute chart now, you'll see anything up. Okay, actually go back to that 1 hour for a second. Anything below this right here, anything below the top of this, whatever the greediest hold level is in there, could that not just create the next part of this ladder, which is polarity? Because if that's the final level, anything above that is going to break the range. So we have to stay below this. So if we literally went to a 1 minute candle and found the greediest level off of that, yep, go. You find the greediest level, which is right here. As long as you stay under this, you're still laddering down. That's an interior decision that is created by an exterior moment. So now just hit play and see what happens. Well, you're going to see what happens. Even here, draw your trend. Oh, you have your bottom side trend. Perfect. Yep, go ahead. Oh, trading view is so slow. Wow. There we go. little snappier now. You have your bottom side trend. You might need to adjust your trend here, I think. So now you need to hard close your trend. Probably a bigger time frame first, remember. You're working the wrong way here. Start on the 15 or the hourly, because we created this on the 4 hour to the hourly, so you missed the time frame, right? Yep.
I mean, it doesn't hard close, right?
Right. So now wait for the hard close. So play it through and wait for the hard close. Play it through. Good. Stop right there. Go back into your 1 minute chart. Okay, let's see what happens now. Level gets hit perfectly. Okay, pause. Go to your 5 minute, I believe we were on. Was it the 5 minute that we already done, or was it the 3 minute? We'll count a bit. Where's the reach point in here? Hover over the trend for me.
It was the 5 minute, I believe.
Okay, then go to the 3 minute and hard close the 3 minute. To right there. Yep. Right. Level gets hit. You've got your trend. Yep. Just hit play. Yep. There it is right there. And this, you can pause it. And this was already hit. Right. So you hit that hard close trend, move's gone. So again, you guys are just looking too interior on this move. It's way too interior to make these decisions. Interior moments give you decision points. Exterior moments create polarity. So if you go back to the hourly now, we'll see what it looks like after we played it through. Now you can see where the ladder is formed with a trend that doesn't hard close and a trend that's lost on the bottom side. So if you go down in your charts now, like, sorry, not in time frame. I mean down as in on the chart here. Yep. What are we on the hourly? Sure. Mark that level for me. I think there's something else. Go to a 15 minute now. We have to find the untested ranges here. Yep. And
Are you looking for your target now?
This one here. Yep.
The body.
Yep. Greatest level on the highest time frame creates polarity. So now just hit play. You should set a buy here probably. Or it should be target from this trade here. This one's already tested, right? That's already tested there, so we can't use that one. We can't use this one here. Oh, there it is, perfect. Exterior moment, interior decision.
There was nothing
Exterior,
on the hourly.
exterior moment. Nope, we did the hourly. The hourly was down here. Exterior moment, interior decision. Exterior moment, interior decision. You see, you guys are working the wrong way in the charts. You guys are on the 1 minute charts trying to justify timeframes in the wrong direction. You guys are working from this side going up, which is, it will always give you a mistake, like what you saw. It will always give you a mistake. Interior, and then if you're going to make a decision, start out here and then work your way down to what's available. Because even if you go to the hourly here, develop. Okay, so mark that. Okay, that's polarity. Let's go to the next time frame because there's no polarity after this. Like there's nothing here. From here to here, there's nothing from the top to the bottom. So you just go down to your next time frame. Yeah, perfect. This one's tested already right here. That's tested. This is the untested level. Perfect entry. Actually, perfect entry. Exterior creates polarity. Interior decides polarity. You can't go on a 1 minute and say this is interior and then the 3 minute is exterior, I and E, interior and exterior. If you do that, you're saying that none of these exist. So it doesn't surprise me that people are losing money on trades and getting liquidated when this is the procedure that they're doing.
Okay, let's take a break before we continue on to the next lesson. And sort of drill the topic. Okay, let's tackle this first, Kokomo. back to the market stop. I've been setting my stop losses at 0.3 for my buy to count potential deep dive. They're using a market stop, then allow practice to keep tighter stop loss while keeping in the trade. Yeah. It protects against scenarios like that where there's like 1 second dives. They don't happen very often, but when they do, they're painful because it's like, yeah, well, look how much percentage this was. Like for me, if I was in this trade, what is this, $20,000? More than that, 14% currently. So if I was, deep diving on this trade, like I'm 100x 2,500. So like for me, say I'm in around for like 41.2, for example. If I was still on this trade, what is that? That's like 20K for me. Yeah, that's like $20,000 that I would have missed out on. So like, yeah, I mean, market stops protect you from scenarios like that where it's 1 second insane candles, but they won't always protect you. It's that one scenario they protect you from. So, I mean, if it happens once a year, it's worth it because, whenever they happen, it's big money like this. So, I mean, yeah. Like limit stops are kind of, when a move is failing, it's failing. You typically find a final point in a move. Like I don't find limit stops really that useful because unless it's in profits, when you're in losses, I don't find it that useful because like when something is failing, you should have that moment marked out on your chart. Like if there's a 1 minute hold level, for example, like go to any part of this thing. Oh, actually it's much more than 10%. Actually, let's look at what it actually is right now. So if I was in a 41.2, it's actually much more than what I thought it originally was. If I was still in this move, this is like $35,000. 16%, that's like, no, not quite that much, is it? 25,000 is 10%. 6 times 25 is what? 150. So another 100. No, dude, what's wrong with my brain? Why can't I do math this morning? Be like 37,000, like $37,000 misclick, right? So 40K, yeah, like 37, 40K. I'm just rounding. So for example, yeah, 16% would be 40K. That's right, because 4 more percent would be another 10K. For example, if you were playing this level right here, if you hard close under this, you want to be out of the trade, right? Like if you're over here out in the move and you start hard closing under this, you want to be out of your trade, right? So this level's tested regardless here or here. It's simply laddering off of this part of the move, and it's the only piece left that you have that's an actual level. So it makes a pretty good trade. If you're starting to go underneath this, and if you're starting to hard close under here, like you need to be out of your trade ASAP because it's about to dump. So I don't really see how like a limit sell would help you there. You want to like smash that button ASAP. But like if you're 100x trading, it's different. Obviously, 100x trading, you have to be very, very visceral and like extremely accurate. So, for me, it's like, okay, here's a level. I'm going to take it as a 100x trade. If we start like losing this level, I'm out. I don't care. Like this thing could just fall off a cliff, and the difference of like 1 second could be like 15% of my position. So I don't care about the extra 2% market fee I have to pay. I just click market. I just get out of the trade, click market. So for me, it's like, yeah, you're talking about what I use market stops. I'm typically always using market stops because I'm a 100x trader. You don't have the luxury of just kind of sitting and waiting. Hopefully that helps and makes sense. I think you have to decide if like what your leverage you're using first before you decide if you should be using market or limit. Like limit's always going to reduce risk if you can manage the scenario better. 5 minutes just analyzing those trading ads. I'm going to, Miho. I'm going to do it on Twitch. Actually, I've been thinking about that. It's a lot of fun. What's the best way to close trades? Like this insane knife catch, the first minute or two are so volatile. Do we put a sell beforehand? I think you have to dictate it by the value of position size. Like for me, if I was in this trade, I would have sold this right here. Like I would have been in and out of this thing so fast because I'm using 100x on $2,500. So if I was in this trade, this to me is $20,000 in 1 minute, 20 grand in 1 minute. Let's just put that into perspective. That's like my entire Patreon monthly fee, or like half of what I make on Patreon in a month. And I work 16 hours a day for Patreon. In 1 minute, this is close to $20,000. This thing would have been moving so fast, I would have just been like, oh, here's 20 grand, I'm out of here. So I don't think you should define it, Matt. You say a knife catch. I think it's more of a value proposition because sometimes you know, I might have made that same play if all of a sudden we were here at 4% and we started stopping and moving, like, and just kind of stopping a little bit and just kind of lingering around here a little bit. I might have just let this thing linger around, and it was like, oh, this thing could dump. I'm taking my $10,000. I made 10,000 in 1 minute, right? Like, so I think you have to, at first, you have to look at, okay, how much is it worth for me to take that trade? Like, what is it accomplishing for you on your day to day, right? I think that's a good way to look at it, because if you're using a higher leverage, higher amounts of money, and that money means more to you, I think you're locking up profits faster. If you're using like $100 and you kind of just want to see what happens, I think it's okay to let it ride a bit more. And I think you have to self-analyze like what it means to you. Like, there's a technical accuracy here, but then there's also a reality in this where it's like, if I can make $20,000 in 1 minute, I am taking that trade. I don't care how high it goes. So, you know, I'd be scared to lose that kind of profit. So I think there's a technical accuracy, but then there's also a realism that makes sense for your everyday life. Like that, you know, pays for my mortgage for 4 months. You know, my mortgage is like $5,000 a month that pays for my mortgage for the next 4 months, and it's 1 minute of work. So I think there's a difference there of what the money means to you and what you're trying to accomplish. And, you know, there's nothing wrong with taking 4% here, and then you see the trade stabilizing and you're like, oh, I want to take another 2% here. So like, why couldn't you just like take this level here? And, you know, you can see it's holding the top of this level. Come on. You can see it's holding the top of that level there. And you could just play it to this inverse right here, right? Like, so then you could just play this move. Like there's here, like what is this? Like 3% or something like that? Something crazy like that? Like 3% in a pretty, come on. It's not even 3%. It's a lot less. It's like close to 2%. Like there's nothing wrong with taking like a 4% here as a really good trade, and then just waiting for a bunch of like little scalps inside the range, because like you could have just taken this hold level, like this series of hold levels right here, right? Like this is the backside, this is the front side. Like, why couldn't you have just taken this level right here, right? Like this is the same thing. Like, why couldn't you have just shorted this back down to here? And it actually goes much deeper. So then you would have made another 2% or 1.5% there, and then you could have played this level here and make another 1%. Like I almost prefer that, because if I'm going to be day trading for a long session, and so this is kind of like one of my secrets on how I day trade. If I'm going to be day trading for a long session, if I have a trade here and I'm out here, this gives me 8%. I'm already up on the day. So if I make 3 mistakes for 0.6% and that gives me -2, I'm still up 8% on the day, or 6% on the day. If I've taken 3 bad trades in here, I screwed up all 3 of them, I'm still at plus 6% on the day. So my daily income is like really all I care about. So I'm still at, you know, 15 grand profits on the day. And it allows me to just play different parts of the trade that feel a little more safe and comfortable. Like I like doing that instead of just catching this extreme knife and then just holding, because you can make more profits by playing all the scalps, and it's safer, and you can lock up those profits. You can lock up, even if it's just 4% like this, you can lock up 4% here. Right. And then just, it's okay if you lose half of it taking a bunch of scalps, you're still in a huge profit for that day, instead of just sitting and holding it. And yeah, okay, it might be a little more money if you sit and hold it, but you might make more scalping too. And the thing about scalping is it protects the account, and it protects the balance, and it locks up profits. And then you can use a dictation of those profits. You can use half of them or a quarter of them, and you can stop when, you know, and that's an experience thing too. If you made 8% and you lost 4% of it, it's a heads up play to say, okay, I'm clearly don't know how to scalp the higher parts of this move. Let me just chill out and stop trading. And I still made 4% while making mistakes, right? I think that is more of a realistic and smart way. Speaking to you guys, and as experience wise and how many trades I've taken over my lifetime, I would rather lock up profits and then just play smaller, more safe parts of the move. It's like, imagine like, okay, so when I was 16, I was working in oil and also at a stereo company, and I used to sell stereos. I sell like a huge stereo one day, and that was good, but I didn't want to stop for the day. I still wanted to sell like cables, and I still wanted to sell, you know, different things that gave me $5 more here and $10 more there. And it was like a crappy job. I didn't make that much money. I would make like $50 for selling like a TV or something, like a big, huge plasma screen TV back in the day when we still had plasmas. So like I would sell like a big plasma TV, make $50, but then I still want to make like $3 or $4 on the odd cable and this and that. So, you know, instead of making $50 a day, I would want to make like 100, you know, or like 80, but it wouldn't stop me from selling like all the little stuff all day long. But if I could like get one good customer and I make $50 off selling a plasma TV, man, I want to lock that up. I don't want to like push it and potentially lose the customer by just constantly saying, oh, you need warranty, you need cables, you need this, you need that. I just like, oh, whatever you need, man. Just let me know and I'll educate you and tell you what you need. You know what I mean? So I don't think I think there's like an experience factor there, that the profits and what it does for your bankroll and bank account and your trading future. I think it makes more sense to sometimes lock up than just stay in these positions. It's fine to stay in them. If you really want to stay in it, stay in it. Sometimes it's a style choice too. But you know, personally speaking, I like locking up like a big, juicy, fat trade like this, and then just having an easy day where I can just, man, you know what I do after a good trading day? I'm just like, oh, I made like 40, 50 grand today. It's such a good day. And then I just like order a pizza and I just like order a pizza and I'm just like, pizza's on the way. And I just have like a Diet Coke and you're like, put all the ice in it, man. I max the ice out. I'm just like, oh, I deserve the ice today. Like this is an ice kind of day. I max this sucker out with ice. And it's just like, I feel good. I've executed my trade. I've made my money. And then I just want to have fun and trade because it's not over for me. Right. That's just like an experience thing though. Whether people are at that point yet or not is another thing. But this is how I handle the situation now, because I like to lock up big profits. But it also is because I work with such big amounts of money. Like I also, on the other hand, can lose half of a mortgage payment in the snap of a finger because I blew through 2,500 because I was slightly wrong. And 2 trades in a row like that, I'm like, oh my God, I just lost a month of mortgage payments. I feel like I want to fall off my cliff, you know, like the cliff in a cliff off the mountains or whatever, like fall off my cliff, like my high peak, whatever you want to call it. Got to go watch replay. Oh, Kartik, I'm so sorry to hear that. That's what I did. Big profits closed. That's so good, man. I'm so happy so many people got such a good part of this trade. It's so sweet. Kartik caught the crazy short from 59,000 and you guys are catching this down at 40. Like, I'm so proud of you guys. I have no idea how happy it makes me because that's, you know, outside of the fee that I charge on Patreon, that's my payoff is to see you guys succeed. So it just makes me so happy. Makes my day to hear that you guys are doing that because it means that you guys are on the right path. Trading made me view the world differently. It's kind of insane how much money there is out there. It's not even, it's so crazy, Miho. Like you can make somebody's income in, like with trading. I've had days where I'd make like a doctor's income for the entire year in 5 minutes. And it's just like, oh, and it just kind of changes the way you look at life and just really changes the perspective of a lot of things. And it's really a nice feeling when you get there, but it's also a life-changing feeling. It makes you a different person. It, little off topic, but it definitely makes you a different human being when you see how like limited and valueless money is and how easy it can be to obtain in the world. It definitely changes you as a human being, like for sure, bar none. People see it all the time. It also sets up for good MA for future for the next day. Yeah. My grandma has been sick. See you all. Oh my God, man. I hope you're okay. I'll have the replay up for you ASAP, Kartik. That way you're not. Yep. Celebrating 20K with a Diet Coke. You destroyed me. It's not the Diet Coke. It's the ice. Remember, it's more ice, not more Diet Coke, more ice. It's the ice that makes it so crisp. It just takes that extra. It takes like the fridge temperature and it takes it a few degrees cooler. And it's that edge, that crispy, that perfect hit. It's the ice, man. We'd be doing multiple trades like you were talking about on Monday. Yeah, that's Monday's session. So we're going to be doing like an accuracy testing session. I'm going to be marking out, we're going to take turns doing this stuff. We'll get into the rules and the bounds on Monday morning, but basically we're going to be rotating in by people. And obviously, because going from 6 in the morning to like 1 p.m. for one person straight is a lot for just me, but we're just going to be rotating in and out and seeing how people do it. And I want people to each kind of have a turn. So I'm going to be marking Bitcoin to start. I'm going to be working with Bitcoin. I'm going to be hammering through alts, marking levels like crazy, and just kind of doing as much as I can. And so, yeah, the accuracy boosting session for Monday. Okay, I need to take a break. I need to rest my voice for a second here before we start the next video. And I'm gonna go dark for a minute here. I'll put some music on so we can take a few minutes break, and then we'll start again.
If this is indeed going to
guys get followed by fake content, report it and block it.
Try to align that properly. If this is indeed going to hold the move, the trade either exists right here as a long or right here as a long and nothing else. You can't long in between this level because this also exists as a short on this side and a long on this side. So you are either doing this in this trade. If this is polarity right here, because this is the same level in theory as this blue one that we have on our screen. So these levels are in theory the same thing. This is polarity from a larger event. This is polarity from a larger event. Okay. So that means you either short right here or long right here, which means you also short exactly this level or long exactly this level here, and nothing in between for shorts. You can't be right here in price and start a long. You can't be right here in price and start a long. You can't be right here in price and start a long, because if you long this level, because it is breaking over and not shorting, this is your target. So if you enter on this middle one right here, right, like this middle one right here, if you've entered that one, your trade is from here to here. That's it. There is no, I enter here and I want to see if it breaks over, because you're going to enter here where I'm circling, and you're going.
So the point of this right now, what I'm saying on the screen, is that there's always going to be a much lower spot to take that trade. So essentially, it's like protection against breakout. You're going to have scenarios where you have like this. You go over top of this, hit the reverse level, or some other moment that is dictating that this was dumping the move. It creates it as an origin and breaks down. This is why we don't take high levels and kind of play them in that moment. If you think something's going to break out, you always want to like play the bottom of the range, because this isn't about this trade here. Like if you were to take this here and just move up a little bit here, this trade isn't about trying to catch a breakout. It's about protecting your trade. You can always make profits in a trade. So here's something that's really important to realize. You can always make profits in trades, but protecting your balance is always going to be more important. So if you were to enter down here, while you could let this trade break your trend on the bottom, while you're still protecting your balance, because if you've entered down here, you can sit here and wait for this top, like whatever I'm saying here about you can't, this is your target, you can wait to see if it breaks out, because you have the luxury of still locking up profits, or at a minimum protecting your account balance, because you entered like right here maybe, or down here somewhere. I mean, you're literally following hold levels here. It's not rocket science. But let's say you entered down here. Let's say you got a really crazy entry down here. You can wait and let this see if it breaks out. The more important factor here is about protecting your account, because you cannot wait to see if it breaks out if you enter this middle level, which makes it so dangerous and which makes it impossible to play. It's almost better to short even if you think it's breaking out than to take a long here, just because of the amount of risk you're taking. The amount of risk in a long here is so fragile versus a short. A short is going to break the entire move down, and the short has a higher, like you have a higher flex in this. Like you take a long here, your flex is like just this little, what I'm hovering over my mouse with. Outside of this, there's not much that allows you to, like, if it doesn't break over this, you have to move over out of the trade. If it breaks over this, you're running the risk of it going up to here and then breaking the trade down. You have no room for error in this trade. So you can't really protect your account capital. You're almost better taking a short here, because you have the expectation that, hey, I'm taking a short here and I want to see the rejection. And it's very clear and decisive as to where a trade down here, you can protect your account capital. So that's just kind of the point of this, playing polarity in the moment here. It's very hard to play, that breakout polarity, because then it just increases risk so much. Like when you play polarity on polarity like this, it increases it so much. You'd almost rather short this move than taking a long there.
Try to break over, and what's going to happen is it's going to go here. And it's going to instantly knife catch down. And in a scenario where that doesn't happen, you're going to enter here, that same price, and you.
Like this is a nice protected entry, because it gives you a very clear, and that's like a good word to kind of use, as a protected entry. This is a protected entry because it gives you a very clear spot. Like if you break this on the 5 minute, you got to get out of the trade. If you break this on the 15, it's not good. You want to get over top of this hold level, or whatever origin here is holding out this move, holding down this move. You want to get over top of this origin, hold that origin and move up. It's almost like you've entered here and you can just sit and wait for it to break its own polarity before you leave the trade. So like, enter here, I'll go as slow as I can here, hits the origin level here, struggles to get over it a little bit, has a little bit of a move down, moves above the origin level, you have a very clear spot where you exit, which is if it loses this origin, which makes this a completely protected entry. Goes up, hold your trade, hits the origin, sits, hits the origin again, keeps moving up, you're in your trade. Polarity is right there, it's at origin level. Go up, hit that origin level, pull back on the smaller time frame, go above it, come here, right here, like this, start to break below it, get out of that trade. And it's a protected trade, because you understood where polarity of this move was. And that's the important part, is like understanding where the polarity of a move is can give you protected trading because it just shows you like the very instant point where things are about to go south, like real fast, right?
Only long once you get over top of the level.
So
That's the
polarity can
only
also
spot
be
where
like an
you can-
account protector. You can use polarity and trades where you've taken like, oh my God, look at this hold level. It's so crazy. It's so perfect. Like 15-minute gets hit right here. Perfect. Bang. Next 15-minute here. Perfect. Bang. Polarity. That protects your trade. It allows you to have like no risk trading essentially, which is like amazing. Who wouldn't want that? Who wouldn't want to be in a trade that never has any risk of losing money, but only has the risk of moving up? You may lose time, but you won't lose money.
where you would actually take
It's important to understand that
You're
concept
either shorting this and
of
exiting
polarity, not
if it
time,
goes over,
money.
or you're longing this and exiting if it goes below.
Understand where polarity is in a move. You take the trade prior to it. Polarity protects the trade.
You can't long in between.
Polarity could also be this
because the
1 minute
short
level
exists
right
like
here on this trade.
$10 away. So you either short this and exit when the short breaks, or you long this and exit when the long breaks. Even if this long is true right here, even if we go above this and up, you can't long these levels in here. You can't long an in-between level.
Yeah, you can't.
Because technically it's
impossible.
Short here. So go to the daily. I'll show you guys where that is. Go to the daily.
Not only because the short can execute, but just
So you
because
can
you're
mark
just
this.
assuming so much risk for no
Exactly.
reason.
It's going to do one of two things there. So you can mark that. Okay, we have no other points. So this would be the next point. It doesn't exist. So just simply go to the 12. Oh, perfect. Look, right there. So you can just actually move this level to there. You don't even need that higher level anymore. You could even move this level to that body right there and see if it's tested, which it is. Greediest point. So now you can just move it to there. Yeah, it's perfect.
I'm going to test the wick on this 12, which is also
You
a
can mark
4.
another level here. See how this level is continuing to hold it against trend. So if this level continues to hold the move,
Probably
it's gonna break
a 1
something
hour
much
backside
bigger.
or a 4 hour
But
backside
if
there.
we are going to break
Looks like a 4 hour
whatever this is
backside.
holding, which is laddering in this moment from here to now here, if you long this level here, it's likely coming to here. And then this is a short on this side. This is a long on this side because it's polarity. But you can't long right here. You can long the levels that break in here, but you can't long in between because you're just going to instantly short here.
And we will make our decision on the small time frames when and if it gets to there, near enough to it.
Exactly, because that's how polarity works. You can't just be back to a 1 minute time frame now for me. Now that
Gotcha.
we have
Right.
now-
So
Yep. Now that we have these levels marked, Val, and zoom in. Yep. Go back a little bit to those points we were at, those moments we were at. We had our 15-minute level right here, which was hit. And then this one is the same thing as this. So it's not actually this level that we're testing. This was already tested here. That's fine. We are laddering from this point to this point, and then you can go forward now. And so this we have marked on the weekly from way back when, but that was already tested. So we can just get rid of that level. We can just delete it because it was already tested in the, no, the other one. Yep, this one here. So this is your polarity in the move because it's going to gap to this. Because exterior wise, that's where your polarity exists because it's laddered all the way from this moment back here in January to here, to here, to here, which is just a little local right here, which is causing this ladder here, which is now here in the moment. And then if you go to your hourly chart now, like a 1 hour, so you can see where the ladder exists from here in the past to here to here. So you can see where the polarity exists on the exterior time frame. So you guys notice how I did the daily first way back here, and then I moved to the 12. So that's where I'm finding my polarity is this way back. Not start here and try to justify polarity going forward in time frames because you won't be able to, which is just going to be ladder 1, ladder 2, and 3, and then in the future 4. Which really, this ladder 1 here is actually, like I said earlier, this is like ladder 8 from the past because it was like all the way from the very top of the move in January of 2018 or whatever
Exterior
it was.
versus
20K,
interior.
ladder,
Nothing really to discuss
ladder
there.
1 and then 2 and then 3 and then 4, and then, by the time you get down to where we are right now, this is really ladder 8. Not only ladder 1 locally, but it's ladder 8 globally, right? So this is like the same thing of polarity. Like this might be ladder 1 for this right here. So this cycle of ladders is just confirming ladder 8. So it's like a box within a box, right? Like this is just all of this stuff here is just like an instance within an instance is how I describe it in AIX. when we're coding AIX, it's like we use instances inside of instances. So this is like a box inside of a box, right? A box inside of a bigger box, right? Instance inside of an instance, where even these local 1 hour timeframes are just nothing compared to this larger stuff. So you can't lose money on those greedy points. Like I've trained you guys from day one, the greediest points. You cannot lose money on the greediest points because they either fall straight through and polarize the other way. You could take this trade, sure. You could take that short. There's nothing wrong with it. It doesn't mean it's the wrong short. It doesn't mean technically it's the wrong level. But what you wouldn't have seen is the backside frontside combinations at a different time frame. So go to the 15-minute for me now. Right? So right here, backside, frontside, frontside combination. So mark this one for me, the backside frontside combination. Yeah, you see it does front run that level and hit it. So it does hit that level. But if we mark this, we know we can't lose money, right? So we could just take the greediest points. We can always take backside frontside combination levels, but there's a risk because they're not the final level that could potentially be hit. Like in this scenario here, right? Could we have go back a little bit here? Could we have taken this because it's a backside on a higher time frame? Well, mark it and see. Let's see if we can make profit there. Yeah, we made profit, but it still went after the greedier level, the greedier untested level. So yeah, you could have made profit here, but you would have needed to be in this trade, enter, exit, because it doesn't hit the break of the level, right? Before you get liquidated. But if you only...
And you see that, yeah, I might take a trade like that, stay in too long and get liquidated.
Yep. If you only ever took this trade, I don't see where you can lose money. If you only ever took this greediest point,
I think this is a good starting point for a lot of people. Just identify the greediest points of a chart and,
if you went here,
really only take trades from there. Most people are past that in this group now, but
does that mean it's going to? No.
Quite okay if you're not.
The greediest level, because the greediest level just represents ladder,
a lot of times I trade even still. I just go,
like down here.
Greediest level only. I don't really care about anything else. Sit on the sidelines until it happens.
Tested, untested. Technically, this one can ladder it. So that's polarization. Perfect. Greediest level that's untested can. So you mark the body.
Let it go until you hit that greedy one or not.
Yeah, I mean, you can use that as a rule. I've always tried to teach you guys that from the start because that's the point where you guys aren't equipped yet to take every single trade. That takes time. But if I equip you guys to take the greediest levels, I don't see how you can be in these trades. If you're only ever, I've said this since like the first week, if you guys take only the greediest parts of the move, you can't really lose money. You can only make money. And it just still remains to be true to this day, months later, right? Like here, and then the greediest point here on the 1 minute candle, and then the greediest point here. Okay, we didn't get a trade there on that third eye mark. That's fine. But we did get a fourth one here on this side. So in this trade, there was like multiple hundreds of percent. Like there is like 20%, like 2,000% profits here on 100x contracts. If you only just looked at this on a higher time frame, worked your way down and just took the greediest levels. There's a lot of moves in between for sure. But again, just start marking those too. Like just start from here. Like was there a greedy?
I think it's our impatience. Our impatience is getting us burnt.
There's one right there. There's the greediest level right there. Here's the next one right here. There's one right here that was polarized. So that one there, you can say, oh, it's breaking up. Don't take it. But then the greediest level right here. Perfect. They're just everywhere. They're literally everywhere. You could go anywhere on any chart, and these greediest points are literally everywhere. Take this trade, short there. Take this trade, short there. Take this trade, long there. Take this trade. Okay, you would have had to exit that one. Maybe you got liquidated. Fine, let's just even call it a liquidation. That's fine. Take this trade, go to that, and you're just going to the next greediest point, right? So you would have had one, and even call these all 100% just to be equal. Just make a rule where you take only 100% profits. 100%, 200%, 300%. We lost this one, 200%, 300%. What did I miss here? 1, 2, 3. Oh, 400%. Oh, so that's 300%. 300%. And then even here, if we're not including these tops and bottoms, right? That's another, like this one here is already to like 400% if you just make a stupid rule. Like procedurally, this is very simple to create where you could just be a robot and just take these greediest levels from the highest time frames working down, right? So again, just to kind of put a nice end tone on this, you guys are too busy going here and working up in time frames and not create polarity here, right? And if it doesn't exist, work down. That's where you create polarity. This stuff here is where you decide polarity. And that goes for trends too, actually, which you know, we won't get into today because that's a whole nother thing, but that goes for trends too. This is more of like post analytics on a move, which is good. Like post analytics, I think, are the best tool of learning here. Even these hold levels now, like we're on a 15-minute chart. Yep, greediest hold right there. There's no other greedy hold. It executes right here. 15-minute right here, greediest hold right here, executes there, right? 15-minute right here, executes there. 15-minute here, executes there. And so you did get liquidated on one of them, which was this one right here, which is fine. It happens. You're going to get liquidated on some of them if you take every single one, but greediest point right here goes to right there. There's a greedy point in here, which goes to right there. There's a greedy point back here, which goes to right here. Yeah, and so on and so on, right? Even if you take this greediest point right there, look for the next one, this greediest point right here, this greediest point right here. Like even these ones worked, even this worked, even this one worked. On the backside, you know, where's the greediest point? Here. This one's not really fair because it didn't reach its target yet. So we can't use that one. So we can't say this one exists because this one here simply can't exist because it didn't reach target yet. So we can't use that. But then alternatively, we could have just said targets right here. Pretty close. I think that quite hasn't reached target yet. But anyways, that's its target, right? Or even right here, greediest point right there is a short. It exists. But again, we can't use that because it's before our target is hit. So we can't use that. But we could use this greedy point right here, which is tested there. So we could use this one right here as our target from this if we wanted. And that's not even the greediest point. This is just on the 15-minute. I would have to see the higher time frame. But anyways, greediest points, right? Like just to cap off that lesson on higher time frames. Working polarity from here won't work. Working polarity this way back will. So that's Dobert, that's where you're getting stuck because you're working polarity from the left side.
But it could have gone up to the other, could have gone past this to the other one and still rejected there just as easily.
No. So you're trying to create polarity in this move, right? Like that's your decision point here. So you're saying this is creating polarity on the move. That was your...
Two ladder down from here, correct. But it could still have moved up to the other one and ladder down from there.
Where did you create this? On the 1 minute or the 3 minute or the 5 minute? Or where did you create this?
Yeah, I entered in the 1 minute and yeah, I was, you know, fine. I was...
So this is the problem a lot of people have as they work time frame small and up, not time frame down, and that's why they miss those things. So I see this often. Just very clear. Always work time frame down, not time frame up. As always, work time frame down.
Yeah.
So then,
as I say, on the high time frame, sure, this is a high, but the other one's a high as well that it could have laddered down from.
So based on that logic, let's walk through this move. So this is tested on the 1 minute. This is tested, right? I'm going to just walk through this. That one's tested there. This one is tested right there. So then if you're in this moment, do me a favor, Devel, just don't move the screen, but cut the replayer tool off right here.
Right where?
Right there where I have my line. Shit, it did that. Okay, just line me up again. Perfect. So in this move, if you're justifying polarity on a smaller time frame, you already tested the level. So I'm still failing to see where the trade makes sense here, because if that's the case, this is the only level of polarity that exists. This one here, I'll do this again. This one in red right here. This is the only level of polarity that exists on a small time frame. So if that's true, once you break over this, you should be longing and not shorting. Because if you're creating polarity on a small time frame here, this is already tested. So how can this be an untested level? Because it's already tested there. And then how can this be an untested level? So you don't even have any untested levels here. So this is what I'm saying, is if you're trying to create polarity on these small time frames, you have to also use it as well, because it can't be like your polarity moment on this time frame is here. So Devel, mark this level for me and just move this level to there. That's fine. The greediest point and play this move. So you should be shorting here and getting out of this if this short doesn't execute, because there is no, there it is right there. Right there, you should be getting out, right? Like you're moving above polarity. Like this is what you guys are asking me. Like, Pat, this is what you asked me. Like, how do you, or somebody asked me, maybe it wasn't Pat actually. Somebody asked me like, how do you see, and I told you guys, it could be a 1 minute candle, or it could zoom in here for me for a second. It could be a 1 minute candle that just flies right over the level, or it could have a few hard closes like this. So somebody had asked that earlier, like, how do you see it? Well, this is you seeing it right here in the moment. So this is the only untested level. So to take a short anywhere here, that's not the greediest time frame on a higher time frame. The greediest point is just it's not the right entry, because even if you're saying that you shorted that level that you shorted, it was already tested on your time frame, but it's not tested on a different time frame. You see, so you can't justify an entry on a 1 minute if it's already tested, because it's not going to respect it. But on a higher time frame, if it's untested, that's your more defining moments of polarity. So that's what I mean when I say, like, I just don't see, like, it's not a terrible short. You were right in the long run, but you picked the wrong level, just based off the principle that on the 1 minute your level is tested. So you just made a mistake on your charts then, because even if you're buying that on the 1 minute, it can't be tested on one time frame and also untested. If it's tested on the 1 minute, then if that's what you're justifying as polarity, you can't, it's already tested anyways.
So technically, these polarized moments are always going to be hold levels, right? Because these holds are either the spots you take a short, or
Mhm.
the hold can't hold you long there.
Yep.
So does it matter if it hits the break of the valley then, in
Nope.
terms of, so the only thing that should matter is
The hold levels,
the hold levels.
which end up being polarity. Correct. The break levels don't mean anything. It's the hold levels that are the key piece, because they give you polarity.
So in the end, the end game is always to just be able to find the polarized moments and take a decision there. Nowhere else should you be trading.
If you can see every single polarized moment on a chart, yeah, but then you're at the tops and bottoms of every single part of the move. Like, then you're a master of catching tops and bottoms. So, yep. In a nutshell, yes. That's pretty tough though. Like that's tough. I wouldn't discredit break levels, because break levels will show you different things like origins. Like, I wouldn't completely discredit them. But if we're talking just in terms of polarity, like just in terms of finding those moments, then that would be true. But that doesn't mean you should discredit break levels, because they give you a different data point, right? Like, they give you a different set of information. Like, it's a different decision we make based on that data point.